Last year, it was a handful of tech stocks that strongly outperformed the market, so naturally, investors are wondering what's next for this year. Joining us now to break it all down is Scott Kessler. He's lead internet analyst at S&P Capital IQ. Now, last year, 13 out of 15 of Scott's predictions were actually correct. So he's here this year. He's back to highlight a few of his predictions for 2016. Scott, thank you so much for joining us.
Thanks a lot, Kate.
Congrats on the 13 out of 15. Fantastic streak for you. So you're expecting some major changes at Yahoo. Can you tell us what you think is ahead for the company?
Sure. Well, I don't think it's any surprise that a lot of people are thinking about and talking about Yahoo. One of the things that we predicted for last year is that they weren't going to be able to execute on activities related to the monetization of the Alibaba and or Yahoo Japan stakes. That didn't seem like such a smart prediction in January, but in December it seemed to play out as we anticipated a year before. Thinking about Yahoo now, really I think it has to start with Marissa Mayer. We indicated that essentially she's not going to be the CEO at some point in 2016, and we think that's really for two reasons. Number one, it does seem like Yahoo has problems that she hasn't really been addressing particularly effectively. And I think secondly, and more importantly, is that she's become kind of a lightning rod for the company in terms of negatives. And that's unfortunate, but when she came in 3.5 years ago, everyone was very excited. And now I think when people think about and talk about Marissa Mayer, unfortunately, they talk about a lack of focus, a lack of execution, and perhaps most importantly, a lack of an ability to kind of retain and keep key talent.
So to that point, where do you foresee Marissa Mayer winding up?
So that I have no idea.
You don't want to make a call on that?
We have not made a call on that, and I think the options for her are probably so substantial that it would be hard to conceptualize where she could go. I would say, though, I would imagine that she would have a number of different opportunities, and she might want to do something kind of smaller with some of her own capital.
Okay, and now some people, we're going to move on to Google. Some people expect to see a spin-off of YouTube from Alphabet, but you are not quite so convinced that that's going to happen. So what do you foresee happening there?
Right. So one of the things that we posited for 2015 is that YouTube was really going to be a business to watch within Google, now Alphabet. And for 2016, what we see is, in fact, YouTube becoming so big and so important, especially given CFO Ruth Porat's increasing focus on transparency and communication. We expect the company to provide more information related to YouTube, and we think that really starts with disclosing YouTube revenues. If you look at what expectations are for, I guess, Alphabet's revenue base for 2015, you know, it's mid-$70 billion area. So for that to be material in terms of the SEC rules, if you think YouTube generates over $7 or $8 billion in revenue in 2015, actually Alphabet would have to disclose that. And because it's become so big, we expect calls to come for the company to monetize that asset, perhaps via a spinoff. We don't expect that to happen, but we do expect that conversation to occur this year.
Okay, and then finally in 2015, we really saw those FANG stocks, Facebook, Amazon, Netflix, Google outperform the market. Is there an acronym that you're looking out for in 2016?
Well, I thought about this, and you know, I saw one analyst had come up with bagel, and actually what I came up with on the fly is PETA, which is Pandora, IAC Interactive Corp, Twitter, and Akamai. Now, I'd caution that a number of these names performed very poorly in 2015, and so we see a lot of snapback opportunities and value. It also doesn't speak to Facebook. I just couldn't come up with something snappy involving those four letters and F. So if someone could do that, please let me know. But those are 5 names we expect to outperform over the next 12 months.
Just quickly on the Twitter front, that's one name obviously that was hit hard this past year. Why are you picking it as a standout for 2016?
You know, we think the sentiment has gotten way too negative. We see healthy growth for Twitter. In fact, for 2016, I think we're looking at over 40% revenue growth. Look, they have monetization figured out. What people are concerned about is growth in users, and we don't think that's as critical as some people might have you believe. Jack Dorsey is the CEO, Adam Bain is the COO. The product roadmap looks pretty good to us, and we think that Twitter is on the road to recovery for 2016.
All right, well, Scott Kessler of S&P Capital IQ, thank you so much for joining us today. We really appreciate it. And
Thanks,
thank you
Kate.
for watching. I'm Kate Rogers. Have a great day.
Hey YouTube fans, I'm Landon Dowdy from CNBC. Thanks so much for checking out our channel. Here you'll find videos packed with all the info that you need to be smarter about your finances. Be sure and subscribe by clicking right here, and click on all the videos around me to see CNBC's original series Young Money, Tech Bet, Kramer's Mad Money, and all the latest from CNBC.